So guys, we've had quite a disastrous day over on the Chinese equities. The Shanghai Stock Exchange Composite Index falling by 1.5%. Damn, hitting briefly below my bottom trend line, which is quite crazy. And what's going on in China that caused this? Well, yesterday we talked about the snowball financial derivative products really triggering massive sell-offs. But there's also something that's really happening here in China, and I'm seeing this being talked about a lot, and it's the fact that stock collateralized loans are being margin called. So those big shareholders, when they want to get money, they might give a collateralize their stock, basically put that as collateral to the bank, and then they would maybe put 100 million worth of stock, give it to the bank, and they would get $50 million, something like that. And but when the equity prices fall, these guys, they're forced to either top up, or they get margin called, or the bank sells it off. Now the bank isn't gonna take a loss, so that's what the bank does. And we're seeing a lot of these talk about this happening here in China. So is this the bottom? Maybe for Chinese equities. Okay, we'll go back to NIO stock in a little bit. All right, this is NIO stock, but here I just want to share with you this article. This is from today, February 2nd, okay, 2024, and this is from Reuters. Cool. China's stock market slump in January led to a wave of call for investors to top up cash in their margin trading accounts, triggering fears that a further slide in share prices could spur forced selling of tens of billions of dollars worth of stock. The country's blue chip CSI 300 index tumbled 6.3% last month, plumbing 5-year lows as a raft of government support measures failed to revive confidence dented by an ailing economy. Yes, exactly. This pump up. Yeah, that was good policy, right? And then they said they were going to stop shorts, no more shorts. And then, yeah, it was supposed to be very bullish short squeeze, but outcomes Evergrande, liquidation, more FOMO, fear, bullshit, pushing things down. But moving on. Okay. With stock prices falling, major shareholders in China-listed companies who had borrowed against their holdings now face margin calls. That is calls to top up the collateral they placed with lenders. The value of shares that face the risk of forced liquidation as a result totals 183.6 billion yuan, or 26 billion US dollars, up 26% from end of November. Zheshang Securities estimates. So that's a huge amount of money, 26 billion US dollars worth of securities that could potentially be liquidated at a moment's notice. So that's going to put a lot of downward pressure, possibly. The market's drop has also hurt investors who borrow money from brokerages to buy shares via so-called margin trading accounts, forcing them to either sell those shares or put up fresh cash to make sure there is adequate collateral. Yes, I'm seeing so many of these videos here in China where people say 爆仓了, which is basically my account exploded and they got margin called, everything was liquidated, and they got nothing left, which is just completely scary. Zheshang Securities estimates such investors were forced to unwind 43.6 billion yuan of stock holdings in mid-January. So that's quite a lot, all right? Every day we are making margin calls, said Hannah Feng, who works at a major brokerage in Shanghai. As the market keeps falling, some clients repaid the margin loans and quit the game. Brokers worry that falling market will create a dangerous loop in which forced liquidation and plunging share prices feed each other. This is exactly what people here in China are talking about. They're saying that there's a domino effect happening. A further 10% slide from the current market levels could trigger margin calls worth nearly 100 billion yuan, Guotai Junan Securities estimates. Another 20% decline could potentially lead to forced selling worth roughly 360 billion yuan. Fragile confidence. To be sure, the total value of leveraged bets in China's stock market is much smaller than in 2015, when reckless borrowing fed a bubble that burst in a messy way. Regulators have also since rooted out illegal borrowing via shadow banking. In a sign investors are rapidly unwinding leveraged bets, outstanding margin loans shrank by nearly 100 billion yuan in January to a one-year low of 1.55 trillion yuan, 30% below a 2015 peak. Margin loans are currently equivalent to 2.3% of China's total stock market capitalization. But with China's economy suffering from a shaky post-COVID recovery, a deepening property crisis, and geopolitical tensions, signs of stock market deleveraging could dent already fragile confidence. Mr. Gao, who works at Shanghai-based outlet of a major brokerage, said he makes more than a dozen margin calls every day to clients whose pledged shares shrink in value. Most of our clients supplemented collaterals after receiving the calls or sold the stocks to pay back the borrowed money, said Gao, who declined to disclose his full name. An increasing number of big shareholders of listed companies who borrowed against their stocks also faced margin calls from banks or brokerages. So far this year, nearly 100 listed companies have disclosed that major shareholders are stumping up additional collateral while stressing they don't yet face the risks of forced liquidation. On Friday alone, 14 companies, including Aoshikang Technology Co., Shenzhen Sunxing Light Alloys Material, and Shenzhen Centralcon Investment, made such announcements following their recent plunges in their shares. There is a risk that the swath of pledged shares fall and trigger margin calls, and forced selling could drive share prices even lower, creating a negative loop in the stock market. Liang Fenji, analyst at Zheshang Securities, said in a report. So this is absolutely happening right now, okay? They're talking about it here in China. And oh my God, I mean, going back to like overall Chinese stock market, this line that I drew, remember I said, hey, maybe this was not the bottom right here back on 17th and 19th of January. I said maybe that's not the bottom. This is the hard floor with multiple taps, which if we go back, take a look here, we got the multiple taps, multiple taps, and man, this thing just shot through it, man. So if we look at a smaller time frame, bam, it just shot through it. But luckily this held up. All right, so this luckily held up and we did not shoot over it and stay below it. So this is something to be, I guess, happy about, that this might potentially signal that the bottom perhaps might be in. All right, might be in, okay? Unless, this turns around and goes down lower, the bottom might potentially be in. Now, looking at NIO stock, oh man, NIO stock, not looking too pretty on the technicals. I mean, yeah, it's looking like more consolidation down, more consolidation. This is looking like a bear flag possibly, and we broke this line of support, right? This is this other line, and it looks like we might potentially be heading even lower. I mean, we're at 5.52. Who thought that we could be at 5.52, right? This is pretty crazy. But my absolute basement floor price is the 4.7-ish, all right? 4.7-ish. If it falls to 4.7, that's when I'll be buying more, because this is the gap that I've been warning for quite a while that we could potentially fill, all right? This gap down here at 4.7, yeah? If it fills that gap, buy. I'm buying. Not advice, not stock recommendation, or do whatever you want, but if it gets down there, that's what I am going to do, okay? I'll be buying, I'll be loading the boat, and yeah, but maybe this is the bottom right now, okay? Maybe this might be the bottom right now, perhaps, but I hope it's the bottom, but I think we might head down lower. This is just looking like a bear flag, head down maybe to 4.7-ish, possibly, okay? Possibly. I mean, the if this holds, all right, next week, if this holds, then yeah, we're gonna bottom, guys. But if not, then yeah, there might be more downside ahead. As always, stay safe, stay healthy. Peace out.